All right, let's break down the investment story of Westpac, one of Australia's biggest banks. And it really is a story, a classic three-act play that starts with a massive crisis, moves through an intense cleanup, and now hinges on a multi-billion-dollar bet on the future.
To really get what's going on with Westpac today, you have to start with this number, $1.3 billion. And just to be clear, that's not profit. That's the price tag for a crisis that forced the bank to literally tear itself down and rebuild from the inside out.
So, let's rewind. Act 1, the crisis and the cleanup. So where did that staggering $1.3 billion figure come from? Well, that was the record-breaking find from AUSTRAC, Australia's financial crime watchdog, back in 2020. We are talking about over 23 million breaches, including truly systemic failures to stop payments potentially linked to child exploitation. It was an absolute disaster, and it forced a complete reset at the bank.
So, how did the bank respond? They launched something called the Corp program. And look, this wasn't some quick PR fix. This was a multi-year, all-consuming deep dive to fix the very foundations of the bank's risk and compliance systems. Think of it less like a patch-up job and more like deep, foundational surgery.
And finally, by May 2024, it was done. The program was complete. And this wasn't just them patting themselves on the back. The big regulator, APRA, gave them the official nod by removing some pretty painful capital penalties it had imposed. The cleanup phase was officially over.
Okay, so that's the cleanup. Now for Act 2, the rebound in numbers. You can really see this turnaround when you look at the financials. Take return on equity, or ROE. That's basically how much profit the bank squeezes out for every dollar shareholders put in. It jumped from a pretty mediocre 7.4% back in 2022 to a much healthier 10.1%, and it's held steady there. That's a huge improvement.
And this rebound, it's not just in one place, it's everywhere you look. Net profits up, their core lending margins are holding up, but the number I really want you to focus on here is that last one, the CET1 capital ratio. At 12.5%, Westpac has an absolute fortress of a balance sheet, way more capital than the regulators require. And that financial strength is the key to everything that comes next.
Right, so the bank is fixed, the balance sheet is strong. That brings us to Act 3, the pivot to the future.
Now that the past is sorted, Westpac can finally look forward. And the centerpiece of their future strategy? It's a massive program they're calling Unite. This is their big answer to years of falling behind on technology. It's a huge, multi-billion-dollar project to drag their old, complicated systems into the modern era and try to catch up to their rivals.
And if you want to know just how serious they are about Unite, well, you just have to follow the money. Look at this. Up to 40% of their entire investment budget for the next few years is going into this one program. It's an enormous bet on the future of the bank.
So what are they actually trying to do with all that cash? Well, the goals are pretty clear. They want to radically simplify everything. For example, they're going to take 3 different clunky deposit systems and finally merge them into one modern platform. At the end of the day, the goal is to cut their operating costs for good and, maybe most importantly, give customers a digital experience that doesn't feel like it's from another decade.
So you might be thinking, okay, great, they're spending billions on tech that'll pay off years from now. But what about me, the shareholder, right now? Well, that brings us to Act 4, the payoff for shareholders.
Let's kick this off with another huge number, $3.5 billion. That's the total value of share buybacks the bank has announced over the last couple of years. It's a direct return of surplus cash straight back to investors, boosting the value of every share.
And hey, it's not just about the buybacks. They're also dishing out some serious dividends. In fiscal 2024, the total payout was 166 cents per share, which, get this, included the first special dividend they've paid since 2013. That's a big deal. It shows they're confident and they're focused on returns.
And here is the really crucial thing to understand. This isn't just some one-time bonus. Remember that fortress-like 12.5% capital ratio we talked about? That's the engine fueling these returns. The strategy is pretty simple. Reward shareholders with a strong income stream right now, which kind of pays you to wait for the long-term benefits of that Unite program to finally kick in.
Okay, so we've seen the crisis, the cleanup, the pivot, and the payoff. That brings us to our final act, the verdict, and what I'm calling the price of success.
So how does the market actually value this story? If we look at its forward price-to-earnings ratio, Westpac is sitting around 18 times. Now, that is a huge discount to the market's golden child, Commonwealth Bank, But it's not the cheapest kid on the block either. It's more expensive than ANZ.
Look, there's a reason the market pays a crazy premium for CBA. It's just more profitable. It generates a much higher return on equity. So the key question for an investor is this: is Westpac's lower price a genuine bargain, or is it just a fair price for a less profitable bank? And that right there is the core risk for anyone looking to invest today. The stock's already had a pretty good run. Its valuation is sitting above its long-term average. What does that tell you? It suggests the market is already assuming everything goes right. It's pricing in a perfect landing for the Unite program, leaving very little room for error if things don't go exactly to plan. So as we wrap this up, it really all boils down to 3 critical questions that you as a potential investor have to answer for yourself. 1. There's a new CEO in charge. Can they actually pull off this incredibly complex tech overhaul on time and, just as importantly, on budget? 2. What happens if the economy really hits the skids? How will their loan book hold up? And finally, the big one. After this impressive turnaround, is all the good news already baked into the stock price? That is the multi-billion-dollar question.